Hi, this is DJ Nick for today's video on trading. So I thought the analysis videos were getting a bit redundant, so I decided to make something different, much more interesting, and which would be more appropriate and useful because the analysis changes, but the rules are fast and uh, are steadfast for trading. So let us look into these rules. And before I start, here's a disclaimer. And so let us get into the top 10 rules to begin trading. So rule number one is never overtrade. So overtrading is one of the biggest mistakes you can make because it will dilute the rule set that you have that you carry out for trading. So you will reduce what it takes to be an effective and efficient trader. So never overtrade. For beginners and even for seasoned traders, you should always have no more than 3 trades a day. Okay, and rule number two, this is again another big mistake that people make that shouldn't be done. And this rule says that you should not be doing emotional trading at all. So trade according to how you have set yourself to trade. So trade like a robot. Do not trade based on complacency, saying that the previous trade was good, so the next trade will be definitely good. Do not trade because you need money, or do not trade because you can see you can see by an intuition that not backed by fundamental and technical cues that there is a chance for a certain direction in a trade. Do not trade because you lost the previous trade. Do not trade based on anger or revenge. Do not trade when you are bored. Do not trade this is also very important because we have phones, very good phones right now. We have this tendency to quickly get on our phone and check the trade and enter into trade. Now, if you are entering into a trade when you are bored and you're checking your phone and there's nothing better to do, then what and just make sure I'm not saying do not trade from the phone, but before you trade from the phone, make sure you have analyzed the chart and make sure you're following the rules. Do not just go by do not just gamble off through your phone when you're bored. Okay, and then do not trade based on fear. Do not trade because you are afraid that you'll miss out on a certain trend. Trends will definitely come. It's all cyclical, so definitely you'll have a chance. And do not trade based on blind hope. So blind hope that just because there is a resistance there, it does not mean it will have to be reversed. It will only reverse when there is a retracement. So you please always don't ever trade emotionally. Rule number three is to have a smart risk to reward ratio before you trade. So don't adjust your risk to reward ratio when you are trading. Before you start trading, make sure you have a smart risk to reward ratio. So for beginners, it's usually better to have a 0.25% on stocks and 10 rupee margin on options when you're trading. So this would be a good risk reward ratio when you start trading. And also do thorough analysis. Rule number four, thorough analysis. So plot all the important levels that are part of a chart before you start trading. So plot all the important demand and supply zones, know how the put writing, call writing is happening at those zones, ensure that you have adequate information of the pivots, the indicators that you are accustomed to using. For me, it's the moving averages. So and also know what's happening with the chart patterns. Chart patterns are also very important. They're very strictly adhered to and quickly adhered to as well. So chart patterns, especially if you're an intraday trader, are very important because you can take those quick turns that happen during the with the help of chart patterns. And always remember to set a stop loss. Rule number five is to set a stop loss and to stick with it. So don't just take out your stop loss because it seems like the trade might go better, or because it take profit was narrowly missed. Don't think that stop loss will, if reducing the stop loss will make the trade go up. That's absolute nonsense, and that does not happen. So set a stop loss that is closer to the nearest support zone, and just below the nearest support zone where a retracement cannot be observed, and take a trade from there, and leave it at that. Do not keep changing the stop loss, especially for intraday trades. If it's a swing trade, that's a different issue, but for intraday trades, do not change your stop loss. And trade and rule number 6 is that always have a confirmation that is based on your hourly, 15, 3-minute, and 1 minute. So ensure that your confirmation is not just on the 3-minute chart or the 1-minute chart, but ensure that your confirmation first off is in the hourly, then 15 minutes, 3 minutes, and then the 1 minute. And after the best time to get your entries would be in the 3-minute and 1-minute chart. Once you identify the trend and the direction in the 15-minute chart, I'll make another video on the how to make the entry. That will be a separate video on top 10 rules for entry as well. Rule number 7 is close your trades when you. For me, I close my trades before 12:30 because I do not like to trade after 12:30. The volume in the market is very unsettling after 12:30, so I ensure that I close my trades before 12:30, and also recheck if you have closed your trades before the final bell, because once the trading is closed, you would be liable to be charged if you have open MIS positions on your trading platform. And then rule number 8 is record your mistakes and understand what are the concepts that are underlying in those mistakes, and ensure that you understand these concepts, and recording these mistakes and solutions for the mistakes, the conceptual solutions for the mistakes, will ensure that you do not commit them again. And rule number 9 is do not be distracted when you take breaks and you come back to trade. So if you go for a break during your trading session and you come back, there are chances of being distracted. And trading is a very continuous process. So when you have that small amount of relaxation, what happens is that your mind doesn't immediately get back into the trade. So you might have missed out on a few vital signs, and this can be, of course, recorded. If you go through the multi-time the rule number 6, you would not be distracted by you would not have to follow rule number 9. But just to be completely sure, if you take a break and come back and you see a buy opportunity or sell opportunity, don't immediately get after it. Ensure that you have gone through the rules once more and then take it. So every time before a trade, make sure you analyze the rules and before you take the trade. And also, don't just trade based on technical cues. Ensure that you have a clear understanding of the fundamental global national cues, the news that is shaping the industry, the news that is influencing, the news that is ensuring that the market trends are formed in the right way. So please make sure that you have an idea of the global cues, because they are equally important. They are no less important than the technical cues. So these are the top 10 rules to begin trading. I'll just quickly run through them one more time. So never overtrade, no emotional trading, stick to a smart risk to reward ratio, thorough analysis, set a stop loss and stick with it. Trade with a multi-time frame confirmation. Close all trades before 12:30. Record mistakes and understand what conceptual solutions are there for them. Do not make distracted decisions after taking breaks during trades. Pay attention to fundamental cues just as much as you pay attention to technical cues. So thank you for listening. This was Nikhil D. Jonathan for Nikhil D. Jonathan, aka DJ Nick, and Do keep yourself subscribed to this channel for more of these type of vital analysis required to be successful in trades. The next video will have the top 10 rules to entry of trades. So do stay subscribed and tuned for more of the same, and give it a like, and the YouTube algorithm will give you more of this wonderful content. Thank you for listening. This is DJ Nick signing off.